Hi everyone, and welcome to the weekly update with me, which is Premier Market Analyst at Antec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, looking at the way that markets have opened on Monday morning, there's a significant risk-off sentiment that we're seeing in markets as at the start of the week, and this has been driven by the healthcare legislation that failed to get through Congress on Friday. That has led to markets sort of questioning the viability of the Trump trade. Can he put through the fiscal spending? Can he put through the tax cuts? Can he get the deregulation get through Congress? So these are all questions that investors are now sort of putting across, and it's impacting across the dollar, across Forex markets, across commodities and equities as well. So we're seeing the dollar, which is breaking down this morning, breaking down below that 99.23 key February low. That's a big level. Certainly seems as though the big uptrend is now going to be tested on dollar indexes. The chart shows here below. And also we're seeing impact across Forex markets as well, with big levels on the euro dollar being broken, and also dollar yen continuing to track lower. Now your equity markets are fairly sort of negative on the open today, and again they're sort of still testing some key levels, not yet decisively broken down, but certainly there is some key moves possibly underway. Now, in terms of the economic calendar, we've not got a great deal on the agenda this week until Friday, so there's not a huge amount to turn market sentiment around. But starting off with the Forex markets, we've got the euro dollar, which is testing 108.50. That is a key level that's been in place for months. That is a neckline resistance of a base pattern. That is sort of already being tested today. Needs a closing breakout to really sort of suggest that the market is decisively moving higher. On your dollar yen, there was a big breakdown below 11.60 last week. That completed a 400 pip consolidation breakdown. That implies 107.60 initially, so that is possibly what we're going to see in the next few months. Now, this obviously relies on the continuation of this reversal of the Trump trade, and I think that the safe havens status that the yen gets off that and certainly would help that trade to the downside. In terms of cable, there is still a sort of trading range in place on cable, although it has had an upside break above an initial resistance today, 25.80, but that has now opened the highs of the range again, around the 27 to 27.75 key resistance there. In terms of your equity markets, well, we've seen Wall Street, which is starting to break trends and starting to top out a little bit. So you've seen the S&P 500 breaking below 23.54. That implies around about 23.10 towards the downside at the moment. But I think the interesting fact would be the DAX chart and the FTSE chart. DAX is now sort of starting to sort of threaten a downside break of a recent consolidation range. That would open up the 11,400 to 11,700 area. FTSE 100, similar sort of situation there with with the support coming under pressure, and again a topping out would suggest we're going to be testing a key uptrend channel support on FTSE. So some really important moves that we could see on these equity markets on this correction. In terms of your commodities, you've got gold, which is strongly higher on the weakness of the dollar. It's broken out again this morning, and it looks like it's going to be testing the 12.64 resistance. Now, also we're seeing silver breaking on a similar sort of line higher, and there is certainly a sense that the safe haven sort of status of the precious metals is certainly being benefited from that weaker dollar. So in terms of the oil price, that's a sort of different story because it's still very much supply driven. The fact that the US oil supplies are continuing to grow, you see again the rig count going higher on Friday. That is a real problem for the oil price, and it continues to remain under pressure. WTI solidly below 50, continuing to fall in a trending scenario, and it looks like it's going to be coming back to test maybe 47 on Brent crude. Again, it sort of looks like it's going to be coming back towards a test of the key $50 barrel mark. Now, in terms of your key economic announcements throughout this week, as I said, not a great deal on the agenda. A little bit of little bit of final growth data for the US GDP on Thursday, but generally speaking, markets will be sort of looking out to Friday, which is when we get the PMIs from China. That could be a risk appetite day if we see the PMIs improving in China. But then we're looking at inflation for the Eurozone on the flash CPI, but also the core PCE for the States. Are we going to finally start to see the core PCE picking up, which is basically around the world we've seen inflation picking up, but not really so much on the PCE for the States, which is the Fed's preferred inflation measure. So are we going to see that picking up on Friday? So that's the key factor to watch out there. But in the meantime, on Wednesday we've got the UK triggering its Brexit officially, with the Article 50 being being signed there, and what would the impact be on sterling perhaps, and also UK assets such as gilts. They are the ones to watch on Wednesday. So I wish you good luck in your trading this week, and I'll speak to you next time. Thank you.